So we had public sector growth for years, and all the job growth, over 50% of the jobs that came into were public sector or public sector related jobs. And that's funded by a taxpayer.
Yep.
I would rather see a risk taker risk his own capital or risk his company's capital or his hedge fund's capital to drive that growth. And I think that's the thing that the average Joe Lunchpail doesn't really understand. That if you repeal the business cycle, you do it by throwing public money at a recession. And you don't see the recession, you say everything's okay. But you know what it's like? It's like going to the doctor, and the doctor says, geez, you got 103 fever. Yeah. And he takes the thermometer, and he puts it in the refrigerator, closes the door, leaves it in the icebox, pulls it out, says, you're down to 96. He's just cured the symptom.
Hey, everybody, welcome back to Markets and Madness, the place where we discuss the madness that occurs when politics, economics, and personalities all move in different directions. Just another reminder, we have a lot of new viewers that have coming on, and I would say less than 1% of our viewers are subscribed. So if you do find anything that we say interesting, provocative, thought-provoking, please subscribe, ring the bell, let us know what your thoughts are. We have had some comments back and forth, and we have appreciated them. So continue with that. And with that said, good morning, Tim. How are you?
Hey there, Fred. Just looking at this market this morning. United Healthcare brought the whole Dow down.
Yeah, I saw that.
It was down 18% or something like that.
Yeah, down big, 100 and something, and I saw Lilly was up 100. So, it's the insurance
Market feels
companies and
heavy.
healthcares.
We're in a trading range, but it feels heavy today
Yeah,
before the holiday.
it's it's been a quiet week when you consider all that's going on. I guess you could say holiday week for the most part. Easter coming up, Passover. Markets are closed tomorrow on Friday, so I think we're going to have more of this quietness, and we're still getting a lot of comments, so you can't really judge one day to the next where it's going to be. But I'm comfortable that we're going to be in this trading range for a while.
Well, my advice is to smear lamb's blood on your portfolio to keep the angel of death away.
That's
So my initial thoughts. This volatility is pretty remarkable. In a blink of an eye, you're up or down, 0.5%. I looked this morning, the Dow was down 600. The NASDAQ was up 0.25%. It's wildness, and like we said last week, the volatility is still king, even though vol has dropped significantly.
right, and we're going to see it come off, through the rest of this week as we go through. We have a lot of decay coming up Thursday, Friday weekend.
I had somebody request we talk about the dollar, and he was asking me about it directly. And, what I was trying to stress to him is that it's not a black and white issue. It's gray. And there's a lot of pros and cons when you adjust the value of the local currency. And we were talking about it with regards to tariffs and Trump. And immediately it's like Trump wants a lower dollar to benefit exports. I said, I was on CNBC one time. And the guy said to me, well, a lower dollar is good. And I said, well, why is it good? And he said, because it stimulates our exports. I said, so you're saying put something on sale is good? He said, what do you mean? I said, well, if it's really good, why don't we just take the dollar's value down to zero? And then our exports would be free. And then nobody could compete with us, right? You're putting your assets on sale. So with respect to what a lower dollar might mean now, one of the things it will do is it will encourage investment. You're sitting in Europe and you're going to invest $10 million and they lower the value of the dollar, it only takes maybe 9 million euro to do that instead of 9.5 million euro to do that. So if you want to encourage foreign investment, you get the dollar lower, and at that time the dollar's at a discount, which means dollar-denominated assets are at a discount. So they weren't really looking at it. He didn't look at it from that perspective. He looked at it in terms of our exports get cheaper, and they do, and your imports get more expensive, and that's pretty much the whole point.
And our assets get a lot cheaper. If you have a bond
Yeah.
portfolio, if you have a real estate portfolio, and it's revalued in dollars, and all of a sudden the dollar's down by 20%, regardless of where your real estate or equity portfolio has to be up by 20% for you to break even.
Yeah,
Yeah,
for foreign investments.
yeah.
From the point of view of a foreigner, that's true. If you're dollar-based, it's not true. If you're dollar-based, you don't notice it. And that's what you get is a bifurcated economy where the exporters benefit because their stuff has gone on sale, and the importers get hurt, and your asset holders get hurt. You're putting the national assets on sale, and that's the part that's missed. So part of Trump's deal is to encourage foreign investment into the U.S., to entice foreigners. So we're looking at it from the standpoint of, well, you can avoid the tariffs if you come in. But if the dollar's lower, you come in at a cheaper cost to you in your home currency.
I remember in
So,
the early '80s when the dollar was prior to the Plaza Accord, right? You had Europeans coming in, buying cheap dollars, investing in real estate, and then you had the real estate market soar, and the dollar soared with it, and they had the double bang.
yeah.
Yeah,
A local American, so that's one of the implications of the many implications of a lower dollar. They say a lower dollar is inflationary, and it is if you're an import country. And with the trade deficit that we have, a lower dollar would raise the price of those imports, but it would also encourage investment. So it's a two-way sword. A stronger dollar is disinflationary.
and it was everybody's been talking about the tariffs as just being inflationary, and I think we've seen just the opposite. You know, as it weakens the economy as we.
Well, we really, I don't know if we could say that because we really haven't seen the effects of the tariffs. We've only seen what people say they're going to be.
And we've seen the jawbones. Yeah,
Yeah,
the comments. Yeah, that's true.
I've had people say the prices are higher because of tariffs, and the tariffs have not been in effect for more than a day or so. People are talking out of their ass.
Yeah, yeah, that's true. I mean, you buying some things from China. If it's truly and now he's talking about a 240% tariff, right? So something that cost $100 now cost 240. Is that right?
Will eventually cost. Well,
Yeah, yeah.
yeah, and the Chinese exporters are feeling it. They're looking for a pass-through. Somebody make a deal. My sense of it is we're going to start to get some good news in this market. So I'm a little afraid to be on the short side. I've been putting insurance on and off, and I think that's really the way to play it.
Yeah, I took most of my insurance off. The only short positions I really have is in the private equity space. I think that's a problem. I know we've talked about it on and off for a while. I still think there's problems there. So that's really the only insurance I have to the downside. Everything else I've sold puts and was able to capture volatility. And if the market does crap out, I'll buy some good companies at cheap prices.
I got stuff expiring today, and I'm just sitting there with one eye
Right.
on the screen. And if I get put, I'll live with the exercise because I think we're okay here. We're in a trading range.
Yeah. Yeah, I agree. What else did you see all of this talk about Fed and Trump and the Fed, Trump and Powell, too late. He called him too late Powell. His new nickname.
He would like him to go, and I think he's wrong about wanting lower short-term rates. I mean, that might help the financing, but everything he's doing is in the eyes of, I got to have it okay by the next election. That's really what he's all about. I think that's why he pulled the trigger on these tariffs the way he did. Any other way would have been, well, we'll send a delegation over,
Right.
and and he's dealing with one, he's brought them all to the table by pulling the trigger the way he did.
Yeah, that certainly is so. He's got everybody's attention, and all anybody wants to talk about now is tariffs and what they mean and where they're going to go and what where they're going to land. We had a comment the other day. Someone said, you know, we have a driver of the bus. Trump's driving this bus right off a cliff, and I said, we don't know that yet. You know, let's see where it goes. There's so many conversations that are going on that we're not privy to that we have no idea about.
You know, when I see that, I saw something on Facebook by a guy who's an anti-Trump guy, and he's been that way. And it boils into that category of confusing politics with economics. You know, people got a certain political bias, and they want to see this thing pass or fail.
Right.
And as traders, you know, we were trained to be more objective and say, yeah, this is what we'd like to happen, but this is what we think is going to happen, and act on that. If you trade your politics, you're in the unemployment line before you know it. So I think I watched this guy, I listened to what he said, or read it on Facebook, and I thought to myself, you know, you're acting like we could have gone in that direction and kept in the same direction. I mean, let's just assume, let's do what Einstein used to call a thought experiment. Let's just assume that Harris got elected, not to bring politics into it. And I don't mean to do that, but I'm really talking about financial strategies. Well, I think it would be safe to assume that business would be as usual as the same under the previous administration. So, aside from the border, which is more of a political issue, it is an economic issue with the expense it puts on the
Yeah,
national
ultimately.
budget. But without referring to the border, the budget policies would remain the same. We'd be running more deficits, borrowing more debt, growing the public sector more, and but at the end of that term, the debt would be, I don't know, 60 trillion maybe, right? And we'd have to go into the market to borrow 60 trillion and rely on the Chinese to finance it and buy Chinese goods so that they finance it. That was a piss poor direction. And that was the direction we were going. So when they start challenging these policies, maybe they're right. Maybe it's not going to work. I don't know. I think it's going to work, but maybe it won't. It requires a lot of moving parts for this thing to work. But the alternative was unthinkable. We'd be sitting here 4 years later with a debt easily of $60 trillion, funding $1.5 trillion in interest every year, which would basically put all of our social programs down. We wouldn't have any money for Medicare, Medicaid, and we keep selling debt to do it. And that would be the end of the dollar and the end of foreign capital inflows. So we weren't that far away from that. I think 4 years would have done it.
Well,
Looking at the speed it happened under Biden.
if you've seen, I've seen the clips of all the, I guess you would say, leaders of the Democratic Party over the last 25 years talking about we have to put tariffs on China. We got to stop this Chinese aggression, you know, in terms of trade. We've seen Obama say it. We saw Schumer say it. We saw Pelosi say it. Clinton said it, and it was all, you know, reasonably true. And then you have Trump come out and say they all said it, but I'm the only one with the balls to do it. You know.
Yeah.
Yeah.
I mean, it's taking a lot, and you could see it, and it's an enormous disruption.
Yeah.
You know, and it's a big effort. I'd like to see it fulfilled. I would like to see, but you could put your head in the sand and say, yeah, we could live without a steel industry, we could live without a pharmaceutical industry, but can we? I mean, if the Chinese invade Taiwan and push comes to shove, we don't have a semiconductor industry.
Right. And I know there's commitments, hundreds of millions of hundreds of billions of dollars that are going to be brought into the country to build these factories, but that's years away.
Yeah,
That's
it's not
years
overnight.
away. Yeah. And the pharmaceutical thing, if we saw anything during the COVID crisis, it was a shock to the system when the supply lines for everything, but certainly pharmaceuticals were shut down.
Listen, we're a country that couldn't live without toilet paper,
Yeah,
much less
yeah,
pharmaceuticals.
yeah. If you couldn't have your heart drugs or whatever you needed, was it shut down because it was in China? That was
And that's
scary.
where I think this could blow up in his face. Because if China pulls a couple of triggers, he's got to rely on his friends. And I think Trump sees that as okay, I'll do a deal with them and I'll give them a break on tariffs because that's what they want. What I saw Greg Gutfeld say something interesting. Gutfeld's not, I wouldn't call him a brilliant financial mind, but he did make an interesting point. He said Trump is very good at creating an asset when none exists. You take TikTok. Now, he says, look, that asset's going to be worth zero. But if I let it and the government gets involved, it's going to be worth a lot. So there he's creating an asset which he can render worthless because it won't sell to the U.S. market. And all of a sudden it becomes a very viable asset. And that's what he's done with the tariffs. He's created an asset by saying, okay, I can reduce tariffs on you if you give me this, if you do that, if you give me this naval base, if you agree that we're going to take this mutual treaty. And he's tying defense into it. And Rubio's, I'm impressed with Rubio's approach to this too. He doesn't back off when they
He
throw
was,
stuff at him.
to me, he
It's
was
the
a
opposite.
very surprising choice as Secretary of State, but he's outperformed in my mind.
Well, just based on what I've seen him say,
Yeah.
I can do that, and then what I've seen Blinken say, and there's a marked difference. I think if you really want to evaluate this administration, you should get a picture of the previous
in charge.
administration and juxtapose. The clearest one is Mayorkas next to Kristi Noem. I mean, when I look at that, I feel a lot more comfortable with Christie on a horse than Mayorkas telling me the border's in good shape. And now we're bogged down in lawfare, which is basically, I don't want to get political because this is a financial podcast, but sometimes you can't escape it. And tying up the administration in court doesn't seem to be affecting Trump at all. He doesn't seem to be distracted by it. That's one thing. He's bullheaded. He's focused.
But it gives his detractors, it gives the other side. See, look at him. He's a fascist. He disregards the courts. He disregards, and that's going to play to the other side of the coin. Yeah, the other side of
You
the
know, Mussolini kept the trains running on time. You could say
Right.
that.
Somebody brought up to me yesterday because there's a lot of clips of Bernie and AOC together, and they're going to be on the campaign trail. Are they going to be the Democratic nominee? So in 2 years, are we going to have them out? He says, "Do you think they could be viable candidates?" I said, "Well, 30% of the country that hates Trump is going to love them, regardless of what they say. If they wear a blue tie, that's it. That's good enough for me." So.
Yeah. I think right now, Trump's danger is people's 401k. As I look at their 401k, they're used to it going up, but it was going up on a sugar rush. I mean, there was,
Yeah, it
it
wasn't
was going up on
sustainable. Yeah.
public sector funding and public sector borrowing, and the taxpayer was paying for all that growth. And I think it was Charlie Payne who said, we're spending $8 million to get $2 million worth of growth, or $8 trillion to get $2 trillion worth of growth. And that's where we were. We were at a point of diminishing returns where the public sector. And I gave a talk 2 weeks ago at my group, and somebody had challenged something I said and about the programs. And I said, I don't see anybody arguing about the validity of the programs. What I see is people arguing about the efficiency of the programs. You could use the word economy and substitute it for efficiency. And you work for a small company, you watch every paper clip. work for a fair-sized company, and there's a closet full of boxes of paper clips that nobody's using. You work for the government, there's a warehouse full of paper clips, and we can't afford that, to fund that. The taxpayers got to fund that. So we had public sector growth for years, and all the job growth, over 50% of the jobs that came into were public sector or public sector related jobs. And that's funded by a taxpayer. I would rather see a risk taker risk his own capital or risk his company's capital or his hedge fund's capital to drive that growth. And I think that's the thing that the average Joe lunch pail doesn't really understand. That if you repeal the business cycle, you do it by throwing public money at a recession. And you don't see the recession, you say everything's okay. But you know what it's like? It's like going to the doctor, and the doctor says, geez, you got 103 fever. Yeah. And he takes the thermometer, and he puts it in the refrigerator, closes the door, leaves it in the icebox, pulls it out, says, you're down to 96. He's just cured the symptom, the measurement, right? So if you've got a recessionary impact, you've got
Printing, yeah, everything that goes on.
well, no, I mean, if you've got if the functions of the economy are telling you risk off, don't take risk, slow down, the consumer's slowing down. But when you start to see all of those indicators, and you simply throw money at it, you haven't fixed those indicators. You're borrowing money that's got ultimately should be paid back, or at least being promised to be paid back. So that model wasn't going to work. Whether or not this model works, the jury's out. I think it's a good plan, but it's a holistic plan. It requires the tax cuts, which he may or may not get.
On another note, we're seeing meteoric rise in gold over the last week. 33.50, I think, gold.
What do you think that's from?
Well, I think some of it is we've said all along, central banks. I don't think the central banks around the world are comfortable being held hostage by the dollar and by the U.S. administration. So I think they've been buying gold for years, probably since the Russian-Ukraine war, and I think they still are. And now with the fear of the tariffs and what's being done to the Chinese, there's more so. I think there is a lot of selling of U.S. treasuries and buying of gold coupled with it. And I don't know if it's just the Chinese or it's the Chinese and the Japanese or there are other countries involved, but I think it's systematic, fundamental rotation out of treasuries into gold.
It's not inflation that's driving it.
No,
Inflation's
fear.
not a factor.
It's fear. And there's the possibility of war on a couple of different fronts.
I think that's the bigger issue. Crude oil could spike because of Middle East problems. But on the other side, you got drill, baby, drill to put a lid on that. But gold, nobody's going to drill for gold.
Right. Right. Yeah, I think that's, a meteoric rise. Yeah, we all thought it was going to stop at 3,000 or pause. It came back, I don't know, 50, 70 bucks.
So let me ask you this then. What
Yeah.
if we see peace break out in the Ukraine? What does that do to gold?
I think it'll
Stops its rise, maybe?
momentarily, but I think this is a much bigger, much longer term trade. Yeah.
I think they're falling out of love with Bitcoin because Bitcoin was digital gold for a while.
Yeah.
And when Bitcoin broke 100, everybody started to run into it, start talking about 2,000 and 3,000.
Yeah. I mean but those are the latecomers, right? We had Alex Shahadi on here a month ago or so, and I asked him. I said, "We've met the objective. We're at 100,000. Where do we go now?" He said, "Why can't we go 10x?" It's just a matter of timing. He's of the opinion, and I've seen a lot of friends that have been in the FX markets and the financial markets with me over the last 30 years, moving into the digital space. Digital prime brokers now. So there's a lot of movement.
Doesn't it look like gold's getting a play from Bitcoin to some extent?
I
Bitcoin's
wouldn't.
off like 30%, and
Yeah,
gold is up 30%.
but in what period? You know, if you look at Bitcoin over the last year, I don't think it's down 30%. It's probably still up over the last year.
Yeah, undoubtedly. Yeah.
Yeah, it's probably up, up 30% over the last year.
Yeah, but in terms of Vega, gold Vega really shot up in the last 2 or 3 months,
Hmm.
and Bitcoin shot down in the last 2 or 3 months. It's that period I'm focusing on.
Yeah, I don't necessarily think that it's
Okay,
making
so
that
where do
much.
you measure the world? I mean, if you were going to start a conversation, I think the new world is the period since Trump's election,
Yeah,
which puts us in November to January. So really, we're talking about changes from, let's call it December to April, right? I think that's the measurement period you got to look at because that's the new world. And in that period, we've seen Bitcoin drop.
but we saw Bitcoin rise initially because the administration's so favorable to digital. So
Yeah,
I think we got to go look back and see where Bitcoin was. Let me take a quick look.
to me, that looked like the hype. They were buying on the hype, buying on the rumor, sell on the
Yeah,
news.
yeah.
But gold's parabolic rise took place at a time when Bitcoin was dropping. That's I guess that's my only
I'm
point.
looking at a chart now, and I don't know what date this is, but it's probably mid October, mid early November, I guess. And Bitcoin is right where it was, 88,000, 86,000.
So we saw a spike and a
Yeah,
retrenchment.
yeah. And it's right where it's been. So I don't see that as the factor of pushing
What's
gold.
gold look like at the same period?
Let's go back and look. 6 months, yeah. So in October, November, same period, gold was 2,600, and now it's 3,300.
It didn't have the retrenchment.
No, no,
I guess that's the only small point I'm making.
yeah. But
And if you look at the dollar in the same period, the dollar had rallied and was at highs and came off, right? Dollar's
uh,
off about what
yeah,
6%.
yeah. I mean, euro was back close to par and then reversed itself. Whereas if I look at euro over the last 6 months, that's bad tick. Let's look at sterling. It's another bad tick. I'm getting bad ticks on this chart, so it's tough to see. But I think euro back in October was that's wrong. I'm getting bad ticks on this chart, so it's tough to see.
Okay, well, we've had a
Yeah,
recent drop in the dollar
I know we
too.
tried. We tried to penetrate 100 in the dollar, and that didn't last. We got close, and then we popped back up, and now we're 113 or so. So
Is that where we are, 113?
I think, yeah,
I'm losing track of that. I had a little fling with the Swiss franc
yeah,
for a while. I had it and I got it. I made some money, but I got out too early. But to me, that's a better barometer because the euro is Ukraine sensitive and the Swiss franc is less so.
yeah, yeah. I guess the euro's rallied maybe 10% since the election. So what to go back to where we started, the dollar. Where does the dollar go from here now? I think we've had our big sell off. I think it's going to consolidate. I don't see us moving um, very far from levels that we're at right now until some new news comes in. I think we're going to back and fill, back and fill. I think, overall, when Trump was elected, everybody was talking about capital inflows. The dollar's going to rally. We're going to see huge capital inflows, and the dollar's going to soar.
So that's cool.
And then, you know, the tariffs are, the dollar's going to go higher with the tariffs, and we're seeing just the opposite here. So I think you fade that move. We faded the first move, and now I think we fade this move, and the
Yeah.
dollar's in the trading range again.
The market's starting to accept a slowdown and in some parts a recession. Housing, people are pointing to housing, I think, optimistically and saying, oh, interest rates are down, mortgage rates are down. That's good for housing. Yeah, jobs are going to be down, and jobs are
And
down.
and I'm seeing that mortgage rates aren't really down. Mortgage rates are still, close to 7% or something like that. It's tough.
So I guess my outlook, see if you confirm it, is you still don't want to own real estate. Real estate's toppish. Depends on where, of course,
Hmm.
but real estate broadly is vulnerable. We're in a trading range with respect to equities. Bonds, I think, are an opportunity because I think rates are going to come lower. The dollar, probably a trading range, but we got a lot of tariff news out that we got a lot of bombs still ahead of us. And even though Vol is trading around what, 40? VIX, yeah,
Yeah, I think the last time I saw it was, yeah.
yeah, down from 55. If we see Vol VIX get down in the 20s, then buy Vol, and we're back with options because we're going to be looking at volatile markets with tape bombs everywhere.
Yeah, I think overall you got to be nimble in the markets because, we've been talking about tape bombs for the last couple of months and they really have been true. The comment about NVIDIA. Now, now, how do you justify that? NVIDIA, I saw something that said at 2 o'clock, or was it early in the day, Trump said that was like $500 billion that NVIDIA committed building plants here. They're going to build supercomputers and they're going to do it all here, chips. And then 4 hours later, he prohibited them from selling to China. And NVIDIA got a 6 or 8% down move. So it's,
Killed the whole
yeah, sector. Yeah.
Nasdaq, yeah.
Yeah. So I think you got to be nimble, fade some of these more extreme moves. Overall, I read somebody today who, and I think it's prescient. I don't know if I agree with all his times. He says, I'm bullish, but, I'm a 2 year bearish, 10 year bullish. And I would say I'm probably, 9 month, 1 year bearish and 5 year bullish, you know.
Yeah, I feel the same way. I feel the same way. I think we got some tough sledding ahead.
I was talking to somebody in the manufacturing sector who's got a plastics business, and he's saying there's no orders. There's no orders. We're getting nothing. There's nothing coming through. He said, I don't know what we're gonna do. I says, well, we haven't seen the worst of it. Don't assume it's gonna get better. It
Yeah.
will ultimately get better when manufacturing comes back and they're gonna need you here. I said, but in the US and in the short term, we've said it a couple of times. We haven't gone through the layoffs yet. And there's layoffs to
Yeah,
come.
but you know what? We're in a news-driven cycle. Like, for example, this week, if you get good news out of Europe or Canada or Mexico or India, and any one of those are a possibility because they're all sitting at a table, which market goes up 700 points.
Right, but it's still not gonna. There's still the fear of recession here, and I think there's still impending layoffs coming.
Yeah. And we're right at that point.
Yeah,
We're right at that point
but we
where,
saw the ECB lower rates this morning, right? And I don't know if that where that pushes the Fed. The Fed said Powell said he's not going to cut anytime soon, and he's going to be late. Trump just called him too late, Powell, but they were late in tightening, late in easing.
yeah, but they're on the bad end of the tariff argument here. I think that's what they're afraid of.
No doubt.
Germany starts slowing down exports to us, uh, or their consumers start buying American cars over there. I mean, that's what they're facing. We're a long way from that,
Yeah.
but that's what they're facing, and I'm sure that's in the mind. You know what? It boils down to
And they got
what the
budget
market
deficits
thinks.
coming too, with
What's that?
defense spending. And the Europeans have budget deficits, bigger budget deficits coming up with increased defense spending.
All right, I don't think we've been very hopeful here.
I know there's a lot of things moving in both directions, but yeah, I mean, I could see why the ECB is cut this morning, and I think Powell's going to be too late to cut when it's time. Like after, it's like when you're looking at a chart and you wait for the moving averages to cross and you get into position and the gap has already occurred, right?
Yeah,
You're
right.
behind the move, right?
Yeah,
So the lines
waiting
cross,
for confirmation.
right? So that's what Powell's doing. He's waiting for the confirmation before he can ease. And then at that point, it's going to be too late. once again, they're not preemptive.
If I were Powell, I wouldn't ease. I don't think an ease is justified here. And I believe there's a recession ahead. But I don't think his ease is going to help.
I'm not disagreeing with you. I think my comment the other day was that, but when is bad news bad news? And if he's doing it to bail out the stock market, that's not the answer. If he's doing it to ward off a recession,
Yeah.
then there's some different,
But
But
you got real
all right.
fundamental changes.
Yeah.
Okay.
Well,
That's pretty much it.
have a good weekend. Thanks for
Okay,
tuning
happy
in.
Easter.
Everybody, please subscribe. Thank you.